all agreed tonight, all of the speakers have agreed that America has a very serious problem. Not only does America have a very serious problem, but our people have a very serious problem. America's problem is self-destruction. You're headed for self-destruction. Self-destruction. You're headed for self-destruction. Self-destruction. You're headed for self-destruction. Self-destruction. You're headed for self-destruction.
Well, today's topic, self-destruction. It really ain't the rap audience that's bugging. It's one or two suckers, ignorant brothers, trying to rob and steal from one another. You get caught in the mid. So to crush that stereotype, here's what we did. We got ourselves together so that you could unite and fight for what's right. Not negative cause. The way we live is positive. We don't kill our relatives.
Pop, 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 when it's shot, who's to blame? Headlines, front page, and raps the name. MC Delight here to state the bottom line. The black on black crime was way before our time.
Took a brother's life with a knife as his wife.
Hey, it's Soleil, and this is episode 440 of the Orange Pill Investor. And I got tagged in a somewhat, it was pretty uncontroversial thread at first, but it must have been in the damn Misty community or something, because it ended up going a little sideways, got pretty lengthy, going back and forth about whether selling your own covered calls or appreciate it, Howard. Thanks for confirming. I get a little paranoid since I was having my issues. Don't tell anybody I was having performance issues. It's our little secret. But so at one point, someone mentioned the fact that we were ignoring sequence of risk, sequence of return risk, and so they linked a video that British had done, and at first it does seem to call into question the fact that if you're starting with too small of a Bitcoin stack, you will run out of money if you just try to live off of it. I'll share a link to that I've used in the past that I think is much better. It was already quite doomed to fail. Like the scenario started with an equivalent of 1 Bitcoin, and the current value of the Bitcoin at that time was like 67 grand. So everybody knows you can't just retire off 1 Bitcoin. So in that sense, it was a good example, though, of demonstrating sequence of return risk. So I will say that was a kind of a good experiment, I suppose. But it just kind of proves that no, at Bitcoin's current price, you can't retire off 1 Bitcoin. But and actually good on British for doing the work and putting it out there. He did actually, ask people to scrutinize the spreadsheet. He posted it on, where is it? Here it is. He posted the video on X and YouTube, and then also posted a screenshot of the spreadsheet so everyone can scrutinize it. So, that's double plus good, comrade. And so props for doing that. And because he's made that available, it's going to be a little bit easier for us to scrutinize. But I think he made one major mistake that someone in the comments did call out. But let's just go over, and let me make this, get my head out of the way, and we'll make this full screen. So hopefully this can, I'll link his stuff in the comments if you're on X. If you're watching on YouTube, get on X. I'm not going to go in and update the description. But hopefully with this in max screen, I don't think I can make it any bigger. We'll see. Can I make YouTube a little bigger? Let's see if I do full screen here. Will that get bigger? No, not really. Anyway. You can go to the original and zoom in if you need to see this better. But he started out with 1 Bitcoin worth 67 grand. That's all good. All of his math, like the setup, is all good here. He's got the closing prices for strategy, MSTY, all that good stuff. And then over the last year, did this about a month ago. And so over the past year, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So 14 dividend payments were paid out, and those totaled 73 grand. And each line, he said, okay, if MSTY paid out this amount of dividend, how many, Bitcoin would you have to sell off, and how many strategy shares would you have to sell off? And you can see that this is kind of alarming, right? You start out with 418 shares of strategy, and after just a year, you've only got 121 left. And his point, which is, I guess, going to be semi-valid, is that this is NAV erosion as well, right? But the ultimate question is, after getting paid out the same amount of money, what is your overall buying power left with? And this is the mistake in the spreadsheet here. He gave MSTY the credit for having income earned, but he also sold $73,001 worth of strategy, and he sold $73,001 worth of Bitcoin in this experiment. But he put 0 here. And so that is not correct. So in all 3 scenarios, and it has to be this way in order to make it a fair experiment, they all have to have generated the exact same amount of income. So if you had started with 472 shares of strategy, and you had $73,000 worth of bills to pay, and that's what you lived off of for the last year, you would only be down 25% holding strategy shares, literally just doing nothing but going and smash selling a few shares every month, and you can see this too. So you started out with 418 shares, right? And at first, the dividend, or the amount of shares that you have to sell, is kind of a lot compared to your share count. It's over 10%. But then you can see it starts to trend towards, like right here, it's exactly 10%. And then at some point, it falls under 10% and stays there, because this was after Strategy's big run-up, I believe. Yeah, so we had the big run-up in November. And so because Strategy stayed, went up and stayed up relative to the amount that MSTY went up and stayed up, we start having to sell less than 10% of our strategy shares just to keep up with the same dividend, or to keep up with whatever dividend MSTY was kicking out. And at the very end, and he kind of glosses over this, he does admit that strategy has more money than MSTY, but then he says, oh, but you collected 73 grand off of MSTY. Well, you collected 73 grand in each scenario, so you have to be fair with that. So bottom line is, in the experiment, you get paid 73 grand, and at the end of the year, if you just held strategy, you'd have a $50,000, $340 account, and you'd only have a $46,000, $546 account with MSTY. So that, as far as I can tell, that comes to the opposite conclusion that he had intended to come to. And let's just see what would happen if we continued that, right? I'm going to use round numbers because it's just going to be a little bit easier. But with strategy, if we are down 25% in a year, that means if we continue to be down 75% year over year over year, and we go out like 10 years, so I'm going to raise this to the 10th power, we're going to be down to like 5.6% of our original position. And I'm just going to keep going from here. So that's times $50,340. So times 53.4. I'm trying to cheat. 340. So that is bad news, right? After 10 years of your NAV erosion in strategy, just selling shares, you'd be down to $2,834. That's all you got left. So none of these at trying to retire off of 67 grand was never going to work out, right? Your sequence of return risk is going to be catastrophic no matter what. So we're going to have to pump those numbers up. Those are definitely rookie numbers. And there's no telling what the price of strategy would be in the future, but the price was at the end of the experiment, the price was 416.03. So if we divide this by 416.03, after 10 years, we'd have 6.81 shares. Now, the price of strategy probably isn't going to be 416 in 10 years. It might be $4,000 a share or more at that point. But regardless, there's no way to know. But I think for me, I'd rather have, well, I guess we got to do the other experiment. So that was worth $2,834, but it's only, less than 7 shares. Let's do the math on MSTY. So MSTY is going down 31% a year, but let's give them the benefit of the doubt. We'll take it only down 30% a year. And we'll raise that to the 10th power because it's going to happen for 10 years. Now we only have 2.8% of our money left, which is about half of our strategy value. And let's multiply that times 46546. 46546. If you held strategy shares and continue this for 10 years, you would have had, what did I say it was? 2834? Yeah, 2834. And with MSTY, you've only got $1,314 left. And let's divide that by the last known share price in, let's just say that the share price doesn't move. Does he list MSTY's? Oh, I'm sorry. We had 1,979 shares because that never goes down. Whoops. So divided by 1979. Your MSTY shares in 10 years will be worth 66 cents each. So good luck collecting a dividend off of this in 10 years. Now I know I might be putting myself at risk because if I'm making a really dumbass glaring error here, then I guess I'll look stupid. But as far as I can tell, just with my 80 IQ estimation here, having $50,000 is better than having $46,000. I know fiat is a melting ice cube, but I guess I'd rather have a bigger melting ice cube than a smaller one. So the one feather in the cap of the MSTY, I went down to the comments section on his post, and the one thing that I don't really have an answer for was this guy said that the tax treatment on MSTY is going to be better than the tax treatment on selling your strategy shares. And I don't know. That could absolutely be true. I don't think I've ever carried MSTY. I might have carried a couple of shares of MSTY in a taxable account, so I'll get stuck with a little bit of a bill, but it's not going to really be enough for me to really tell, because I think I only bought a couple of shares just to see what the dividend would look like. All of my MSTY and IMST shares are in my IRA, so it's not going to really matter. And really, if that's the case, I should have done it the other way. I should have bought, if Misty's dividends get a more favorable tax treatment, I should have done Misty and IMST in my taxable account, and I should have done my challenge account in the IRA. I didn't realize that. So maybe I bumfugled that on the taxes. But the taxes is not my problem. We're just going to pretend that this is a, what kind of experiment is it when there's no friction? Not static. Sailor likes to talk about it sometimes when he's talking about Bitcoin in a isolated environment. Anyway, doesn't matter. So if you want to play the trump card and say that Misty gets better tax treatment, I guess I have no argument there. And I do want to make it clear that I think that there are use cases for Misty, right? I mean, literally, it's like the convenience factor. I think Mike was mentioning, quality of life. For him, putting some money into Misty, letting them just do it, letting them generate the income, and kind of being hands off, it's worth the management fee. It's worth the NAV erosion to outsource that activity, right? Because if trading is not fun, then why do it? Yeah, let somebody else do that shit. I'm fine with that. I enjoy trading, so this is not even work for me, right? When I quit my job and I'm like, okay, I'm just going to trade in the stock market full time, it doesn't bother me. I look forward to going to the account and seeing, am I up, am I down? Can I tweak? Can I do, whatever? So I spend way more time trading than I actually need to, right? I could literally go in here, sell the 45 days to expiration, come back in a month with 2 weeks left on it, and roll it out again 30 more days. I could literally just spend 30 minutes a month trading my entire portfolio and not be in here every day. But how am I going to engagement farm if I'm not going live talking about the same shit day in and day out, right? You know what I'm saying? So if you want to make quality of life arguments, if you want to make convenience arguments, you're willing to pay for the convenience. If you want to make a tax argument, maybe those make sense. But if we're just going to say, a lot of people try to use copium. It's like, oh, nobody's saying that, Misty's better than MSTR for growth. It's just about income. Well, according to this spreadsheet that British came up with, spot MSTR shares is actually better for income. You can get the same amount of income and have more portfolio left. It doesn't do you any good to have 1,979 shares of a stock that are worth 66 cents a piece in 10 years, right? I'm not guaranteeing that that's what they will be, but I'm just saying if the 31% NAV erosion in 1 year continues for 10 more years, then in 11 years, your Misty shares will be worth 66 cents a pop. If. Not guaranteed, but if. That's just kind of how it be. Yeah, I think that's everything. But, of course, go through. He posted this about a month ago, and someone was kind enough to share the link with me so that I could find it easily. So I appreciate that. But I don't think it really proved the claim that they were kind of hoping and assuming that it would prove. anyway, it was fun to talk about. It was fun to go over it. So thanks to everybody engaging in a lively discussion yesterday, and thanks to British for doing the work. One of his challenges in the video was that people keep telling him, "Hey, just sell your Bitcoin," but they never prove the math that you can actually make it work. And if you want to see how it really works, there's a guy named Bitcoin Hornet on X, and he was kind enough to let me use screenshots from his website in my Strategy World options talk. So big thanks to him for that. And he's got a nice model, right? You can choose from 7 different models, and each one has, like, okay, decreasing CAGR down to whatever percent. And each one has a different, model. And you can put your Bitcoin stack in here, choose your model, what year you're going to start your retirement. Are you going to do a fixed withdrawal or a percent? And I forget what this one does, default or custom. I don't remember what the hell that is. And then, what you expect to pay taxes on your stack. And then you will, you'll hit calculate, and then it'll populate how much your Bitcoin stack will go down, exactly like British did, went through it. That's exactly the type of model, the way that you should do it. And, I think if you have like 20 Bitcoin and you spend, at current prices, if you spent like 10% of that a year, you still end up with like $100 million or something stupid in the year 2054, right? You can't live like a baller necessarily on a short stack, but if you want to live modestly, let's just put the damn numbers in. 20, I forget what model 6 is. Power law, median percent from linear regression line, whatever. That's fine. Anything works. Fixed withdrawal, let's do, I don't know. I don't remember what the difference is. Let's do a percentage. Let's take out, let's see, at 100,000 a coin, and we got 20 of them. That's 2 million. So living off of 10% would be like 200 grand, right? I think that's reasonable. Well, let's do 20%. And okay, yeah, so it looks like, holy shit, I'm like, I hardly have any Bitcoin left in 2054. I'm like, oh no, I'm broke. Like, no, you're not broke. You have $34 million worth of buying power in this model. Oh, sorry, that's the remaining principal. Total value, yeah, 34, whatever. I don't remember what the difference is. Remaining principal, amount left over after portfolio growth, withdrawal, and taxes. Shown to compare what the total value would be without any withdrawals. Okay, whatever. Yeah, so, I mean, if your Bitcoin stack is big enough, you can just retire off the Bitcoin. You don't have to do the fancy covered call strategies and add extra third-party risk to a covered call ETF that may or may not trade well. I know they've had some fantastic dividends over the past year, but NAV erosion is a thing, and it's okay to just own Bitcoin, right? I admittedly sold half my Bitcoin to buy strategy, so I'm not a never sell your Bitcoin person, right? If you want to just hold Bitcoin, and if your stack gets big enough that you want to retire off of it, it's perfectly reasonable to do so, right? I also think it's kind of like a circular economy thing. I feel like in your productive days, you're supposed to stack sats, and then when you ride off into the sunset, you just start spending your sats. and then the next generation can go out there, provide value, and it's their turn to stack sats. And then when they have kids and their kids grow up, it's their turn to stack sats. But you can't stack sats if no one's willing to sell you a fucking sat. If everybody just tosses all their shit into cold storage and it just never, just collects dust and never sees the light of day, then our kids and our grandkids are going to be stacking paper sats. It's going to be, we were joking about Strategy coming out with their own kind of like derivative of their own shares, right? You can just cash app someone a tenth of a share for dinner. We'll call them strats instead of sats. But I don't mind that to a certain extent, and it's fun to think about. But I also want our kids and grandkids and great grandkids and great grandkids to own some Bitcoin. I don't want them to only be able to access paper Bitcoin and derivatives of Bitcoin because everyone that owns Bitcoin is just sitting on their cold storage. And that, I think Bitcoin fails at that point, because what's the point if it's just sitting there and not moving? It's dead. So this is how you retire off Bitcoin. British asked for someone to do the work, and I think Bitcoin Hornet has already done that work. And I think this is a pretty cool website. So check this out if you're like, you know what, I don't want to deal with the stock market. That's another thing that so I would consider myself a Jeff Boothian disciple. And one of the things that he's been trying to do, and it's why he doesn't really post on X anymore, he'll take video, he'll do interviews, and the people inevitably post those interviews on YouTube. But he's been trying to exist like as much as possible in Nostr. And I need to get on Nostr and see if he's putting out work over there. But he likes to say that Bitcoin has to succeed as a medium of exchange, or it will fail as a store of value. And I think his arguments are pretty compelling in that scenario. I don't remember why I got off on that tangent, but I agree with that premise. So yeah, I just want to see everything priced in Bitcoin at some point. Instead of like, okay, how much is Bitcoin worth? Okay, then that's my value. Now, how much can I buy with that value? It's like, no. How many sats is a stick of gum? That's the kind of mental framework that I want to be in. Oh, but that was where I was going with it. So he's been trying to live as much in the Bitcoin world as possible, right? The rest of the world is trying to catch up. And he said he felt like a hypocrite when he was telling everyone about Bitcoin, but he still had like a sizable bit of his portfolio in regular old like basket of stocks and stuff, right? And the companies that he was participating in were not Bitcoin companies. And so he rectified that, and now he has Ego Death Capital, which, they're investing in companies that are investing in Bitcoin and solving problems with Bitcoin. And so if you are trying to just live in the Bitcoin world, you don't have to do all of this shit that I talk about every freaking day about selling your covered calls and managing them and blah, blah, blah. If you can get your stack big enough, and I know 20 Bitcoin is a pretty sizable stack, right? It takes a while to get there. I sure as hell don't have it, especially after cracking open my cold storage. But anyway, it's okay to be Bitcoin only. My whole brand is around investing in the stock market on Bitcoin derivatives, but it's okay to just stack sats, come check out the model, figure out how much you got to spend a year, figure out how much Bitcoin you need in order to, never go broke. If the, if the remaining principal goes to zero, then you don't have enough Bitcoin to retire. I forget what this graph does. Modeled price versus remaining Bitcoin. Yeah, whatever. So this is how you retire on Bitcoin, as far as I'm concerned. But the reason why I was able to retire much faster is because strategy's CAGR is like double Bitcoin's. So if I have to return, if I need $2 million worth of Bitcoin to retire, spending 200 grand a year, I should only need about half of that stack to retire off a strategy. But keep in mind that sequence of return risk is real, right? So if strategy goes up to 1,000 a share, and you're like, cool, I got $1 million worth of strategy, but then it corrects 50%, and now you only have $500,000 worth of strategy a year later, that sequence of return risk could sink your battleship, and you could be screwed. So you have to have a giant enough initial stack to endure, the bear markets, the 50% drawdowns, the 75% drawdowns, whatever. That's all, those are all risks that need to be accounted for. All right. I think I beat the ever-living shit out of that dead horse. And let's check the chats and then see if there's anything we need to talk about. Let's see, Matt. Will be impressive to outperform Misty, in my opinion. Yeah. So in this account right here, I've been competing against Misty since January 23rd. As strategy was correcting down to 250, I was actually absolutely getting destroyed by Misty. They were up like, I don't know, 20, 30 grand at one point against my account. And part of that is because I had a bunch of leverage, right? So all of my leveraged positions were getting absolutely hammered. But I didn't panic, and I just, kept on with the same strategy. And despite losing, like, I don't know, at least 20, maybe 30, 40, 50 grand on the June and July 1080s, Misty dripping into more shares every time the dividend is paid out, so giving them the most beneficial trading strategy. Misty is up 17.7% since January 23rd, and I did the calculations yesterday, and I was up like 20%. One person thought that was like no better than a rounding error, and it's not really a statistically meaningful beat, right? Like if the shoe dropped a different way, then I could be down, and that's absolutely fair. But I would say that even despite the catastrophic mistakes that I made buying June and July 1080s, this account was still more profitable. So you could actually argue that a lot of people are like, oh, I wish I could trade like you. And I'm like, I traded this account like an absolute fucking moron. I absolutely lit all of the June and July 1080s on fire. All of that premium that I collected, that I worked so hard to collect, none of it benefited me. I exited those June and July 1080 positions with like 90% losses, and still up 2% over Misty in that time frame. So I think the point is that, like, I don't want to say that they don't have experts over there, but there's no Like there's only so much you can do, right? Everyone gets the same options chain. Every institutional trader, every retail trader has the same options chain. And to a certain extent, it's a little bit easier for retail because I can get a fill for 5 covered calls anytime I want. But yield max, I would assume when they want 10,000 covered calls at a certain strike, like they got to like enter those positions gently to make sure that they don't move the market. I'm assuming they're doing that. I don't know if they are. Maybe they're just going in like a bull in a china shop. I think the same argument can be made for any managed fund, right? If you're paying Vanguard or Fidelity or any of these people to manage your funds, it necessarily has to underperform you just throwing 100% of your portfolio into the S&P 500 and not paying a management fund, because it's like friction on the account. If you pay someone 1% to manage your money, you have to have 1% less money. And then that 1% gets compounded. It's, let's just figure out what's the penalty for paying someone 1% management fund per year for 50 years. So I'm going to take this to the 50th power. 160%. That 1% turns into like 1.6x. So if let's say you had $100,000 account and you were paying them 1%, which would be just $1,000, right? So times 1,000. I don't know. I think I fucked up that math. I don't know what point I was trying to prove at. Anyway, I forget what the hell I was even talking about. Anyway, before I say anything else stupid, let's keep going with the chats. Strategy dude, I think you should start off an episode with karaoke instead of playing music in the background. That would be me being a dancing money for clicks. Maybe I should try it. MSTR 10 to 20 delta covered calls greater than MSTY. Cannot disagree with that. Cup holder, does MSTY winter combo if you have a magic crystal ball and can time the market? Can it outperform? I'm actually doing I'm going to be doing a True North Now episode. I believe it's going to be on Saturday. I'll live stream it, and it's going to be a deep dive on the winter positions, and we'll go over like what a 60 portfolio might look like. I guess there's a chance. Well, when you say outperform, what do you mean outperform what? Because if you've got like a the people were mentioning 60-40. So if you have a 60 MSTY, that's already, the MSTY is going to underperform strategy. British's spreadsheet proved that. And then the income generating strategy on winter in a bear market should underperform as well, with, the same amount. If they're collecting a 1% management fee and there's NAV erosion, now you're just rebalancing two funds that both have NAV erosion and both have a management fee. So is there an advantage, like when MSTY's value goes up and then you sell high and rebalance into winter, and then during the bear market, strategy goes down and then you're pumping into winter? It's possible that it could outperform MSTY, but I can't imagine that it would just outperform holding spot strategy and just riding it, or better yet, like dollar cost averaging it, or really using the Kelly criterion to figure out what your strategy to cash ratio would be if you don't have anything else to pairs trade your strategy shares with. So I hate to say anything nice about about Fred Krueger's account, but he did have a really good Kelly Criterion video on how you could take profits in your Bitcoin and end up with more Bitcoin. And you use the Kelly Criterion formula, which is the gambler's equation. And I forget what it said, but it was like, I don't know, let's just say 60 to 80% in Bitcoin. And then when Bitcoin's at 75, and then let's just say you had 100 grand and 80 grand was in Bitcoin and 20 was in cash. And then Bitcoin doubles from 75 to 150. Now your 80 is worth 160 and your cash is still worth 20. So to rebalance 80-20, you'd have to sell some portion of your Bitcoin to get back down to 80-20. And then if Bitcoin went up again, you'd sell off another sliver of it. And then during the bear market, you would have, let's just say it went up to 225 and you sold some at 220 or whatever, 200, 220. Then when Bitcoin crashed back down 50% to like 120, 115 or whatever, you would have taken that cash stockpile and now you'd be rebalancing in the other direction because your Bitcoin stack might be worth 150 and then it crashes down to 75. And now you had $40,000 worth of cash. So you take the cash and you buy Bitcoin. And just kind of goes back and forth. It's really nothing more than the 60-40 stock to bond portfolio that was the standard for decades. If your stocks become overvalued, you trim them, and you get back to 60-40 stocks and bonds again. And that would have kept most TradFi people above water at least. But, we have Bitcoin now, so we have to think in a whole new way. So would what you're describing outperform just holding MSTY? I suppose that's probable, but I think it would just underperform holding spot strategy in both directions. I don't know. That's just me thinking out loud, and I haven't done the math. Yeah, BritishHodl. Trump signing the Genius Act right now? I have no idea. I only learn about things when my X feed tells me. Selling Bitcoin and strategy is income earned. What's up, Dana? Assuming your shares get called away once every 10 times on the 10 deltas. Yeah. Oh, adiabatic. Thank you. That was the type of system where no heat is added. Exactly. Thank you. Doc Stacks. Let's see. I hear you on selling sats, but I'd rather sell 0.05 delta covered calls on strategy and never sell sats, to be honest. Yeah. Yeah. In a pure money sense, you'll definitely, seems like you would retain your overall portfolio value better that way. But at some point, my assumption is that I will be I'll be old and I'll have more money than I can hope of spending. There won't be enough yachts and Lambos, and I probably won't give a shit about yachts and Lambos when I'm that old, and it's time to move over. All right, proud to be one of 25 people being engagement farmed on YouTube right now. I'm glad you're here. Proud engagement vegetable. Ah, shit. What's up, Ben? It's over. Solely greater than Misty. The data doesn't lie. Yeah, I got to stop. I should just stop the experiment now. What's up, Jeff? I should have known Ben would be by because all of my covered calls are in the money. They're all getting hammered. When 1080s. I keep trying. I keep stepping up to the plate. I lost my Junes. I lost all my Julys. I made a little bit of money on the Septembers. I think I closed out my Septembers in profit. And now I got my heart set on the Decembers. Covered call sellers like to have an expression where when we get screwed on these, we roll until we're right. And I think I've been doing the same thing with these damn 1080s. I've just been trying to roll until I'm right. Closing in on 1,000 viewers, long overdue. The people have been missing the alpha. So, you know what? I guess I do owe British a debt of gratitude because all of the bullshit titles that I normally put out, yeah, I get like 500. So that's the British pump right there. Over 1K. I got to start clout chasing some more ex-celebrities. Maybe I'll just start a different beef every day with somebody famous. Cup holder, just buy Bitwise Premium and roll. Just buy Bitwise Premium roll. I think I missed that one. I'll find a crystal ball. Let's see. My boy is smart. At least I didn't accidentally ban Jeff from the chat this time. All right, I think that's enough about that. But again, since strategy is up, just absolutely destroying my covered calls. This is the challenge account. So if I were to try to roll this right now, I would have to pay $2,300 to roll them. Now I got paid $1,200 up front, and if I tried to roll these out 2 weeks, I can barely roll them out of the money for a small debit. So the $1,200 that I got paid plus another $3,500 would just about pay for the roll. But I'm really in no hurry. If earnings calls were not a thing, I probably wouldn't even roll these until maybe like a day or two before expiration, if strategy's price holds. Reason being, there's still a ton of extrinsic value that I can collect over time. Once these become in the money, the calculation is a little bit different. When they're out of the money, it's all extrinsic. But since this is 454, the difference between the current price and the strike is the intrinsic value. That's how much I could profit, or excuse me, how much the buyer could profit if they exercised this right now. So if they exercised this option today and basically threw away their 30 days worth of extrinsic value, they would buy my shares for $440 and they're worth $455. So they'd make $1,500 on that transaction. But if they just sold the damn contract instead of exercising, they could make $3,500. So it generally doesn't make any sense to exercise early, right? And that's one mistake that new covered call sellers make is as soon as this goes in the money, they think they're going to get exercised on immediately. And you'd have to be kind of an idiot to exercise with 30 days left of extrinsic value left. So this $1,500 of intrinsic value has to be subtracted from the total value. So those 36 minus the 15, actually it's 16 now, so that's good numbers, leaves me with $2,000 worth of extrinsic value that I can collect if I just sit around and do nothing. If strategy's price is still $456 in 30 days, then I will only have to pay $1,600 to roll this call instead of $3,600. Now, there's no guarantee that Strategy's price is going to stay here. So this could go to 550. And in that case, I would owe 10 grand a pop, and times 5, this could cost me 50, 60 grand. So it doesn't necessarily, like, sitting on my hands and doing nothing is not an I win button, right? It's not an easy button, but it is consistent with my trading style. If there's extrinsic value to be collected, then I do nothing. If the value of this option was like $1,800 and $1,600 was intrinsic and there was only $200 of extrinsic, then yeah, I'm rolling this. I'm either just closing it and sucking it up and taking the loss, or I would roll it out and try to collect a credit if possible. Worst case scenario, I'm saying 550 is worst case scenario, but if I did have to come out of my pocket for 50 grand on these, the long calls here are worth 27 each now. These would be worth much more if the price goes up. So even though 100% of my shares are covered, I've got these, December 1080s, and I've got these poor man's covered calls that are leveraged to the upside as well. So hopefully there's enough uncovered upside to compensate for these covered calls getting bent over. So yeah, nothing really to do here, but just sit and wait. On August 7th, before earnings, I will close as many of these as possible. But since this is the challenge account, I will only close enough, or I won't close any more of them. Well, how do I want to say this? I'm going to close as many as I can, but I refuse to let the negative net theta go negative. If I were to close all of these short positions, the net theta on this account would go negative, and it's probably negative on some of my other accounts because I'm a little bit over leveraged to the upside. Yeah. So in the main account, I'm actually losing money every day if Strategy's price doesn't go up. But again, I've got the short positions, but hopefully I've got enough long positions here to compensate. My December 530s are finally slightly in profit again. The 890s are hopeless. And I've got the one poor man's covered call. So yeah, nothing to really just do here, but sit and wait. Generally, the most activity in my accounts are when the prices are going down, because then there's hardly any extrinsic value left in my covered calls, so it's time to roll them down to a lower strike. When the price goes against me in the other direction, I generally just don't do a whole lot. I just sit and wait. Yep, same scenario here. My 440s are getting pulverized. Let's check the 5K account, which I guess I can really just stop trading it as the 5K account challenge, because the whole point was I was going to see how long it would take me to turn the 5 grand into 25 grand, which is how much you need to be able to be a day trader. You don't get day trade strikes if your account's worth 25. And I've already turned it into 25 a couple of times. In November it was 33, and then of course I turned it back into 8, and then now it's back over 25 again. But I don't know. It's kind of fun. It's kind of fun to demonstrate, how to trade in a somewhat smaller account. So maybe I just need to take 20 grand out and start the 5K challenge over again. The real hard part would be to see if I can make money in a bear market, because if Bitcoin crashes, all these mining stocks are going to crash. So that might actually take some skill. But in a bear market, I kind of feel like the trick will be to minimize the losses. I don't know if it's going to be possible to trade Bitcoin derivatives in a bear market profitably unless I'm like straight up shorting them. And I don't know. I'm going to find it very difficult to buy puts. I think that's just, yeah, shorting is kind of an advanced strategy. I don't really do it very well. So I guess maybe if I pick up that skill, I have to think about it. I'm here by Ben Workman said so. What's up, Mason? Buy more 1080s. So I do every chance I get, but I got to have some money first. There's no dry powder. The only way I get dry powder is when I roll for a credit. And since these are upside down, it's like extremely difficult to roll for a credit. I'd have to roll to the current strikes. I can't even get these out of the money and roll for a credit. So my 1080 buys are on hold unless I dip into margin, which I already did. But that's Ben's fault. It's Ben's fault I'm living the degen lifestyle again. All right, well, I hate to end the stream before we hit 2,000 views. This was a nice surprise. I guess I'll have to drop British's name more often for clout. But I appreciate everybody tuning in. Be good, y'all.